Welcome to Energy Rogue, and we are now calling this the Rogue Radar, at least this week, as we till we find a new name. And Brian and I are here today just to talk real quickly about some of the fundamentals. We're going to start off with crude oil. And looking at crude oil, you're seeing that we've had a pretty hard sell-off today that could coincide along with the other commodities that are selling off today. We had a high today of about 115. We're currently at about 110. This is all, to as far as is not a fundamental change because we still are fundamentally bullish. But I don't think that we've quite realized that we're still calling $109 a low crude price. 6 months ago, we would have been laughing at that phrase. So I think what we'll see is as commodities continue to sell off, that we'll probably see crude oil do the same thing. Gas is another situation where we're seeing such a huge range on daily trade. I think today our high was 850. It's already been 854, been down as low as 816, and so the big move of that. We're trying to see if this is really a double bottom. It's got to go up to about 905, 906. I think, Brian's what we were talking about. Before to be a true double bottom on this, but it's still a big swing for natural gas. And what's going on there in a shoulder month is sort of a little bizarre because we're trying to fill storage with this. This does not bid for a great winter season when we're filling storage with $8 gas. That means that the price you'll be paying for your heat this coming winter will be pretty significant. The other thing I was looking at is that diesel prices are on the rise. It's really, I've read a lot of anecdote stories on this to where drivers they just can't afford to drive anymore for the rates they're getting paid. And so they're parking their trucks. And because diesel continues to rise. We're looking into that. I'm not sure whether or not we're exporting our diesel right now to Europe because it's a higher price in Europe. So we're going to take a little bit look at that probably later this week. Brian, what's on your mind today?
Let's see. Well, I'm going to start on that last point. The diesel to regular spread is about $1.50, and that is close to $1 over the 5-year max at this time of year. So that tells me either diesel has to come down or regular has to come up. I would bet on the latter. However, there's going to be a lot of political momentum against that. Another thing to look at is rejection recovery. We have tightened significantly. So as product prices have come up, as NGL prices have come up, and gas prices have moderated, that's closed this spread. And actually 3 months out, we might be flipping to an economic rejection, something we haven't seen in 24 months. And what that would mean is that we're going to have more gas enter the complex and less liquids produced. Storage, I still hold the same fundamental opinion that we are not at a fundamental level that is supported by $8 gas. I think it's probably supported by 4 or 5, but not 8. We've been at higher production or lower production and lower storage and been at $3. So I just don't see justification for 8. The forward curves looks kind of interesting, pretty flat for the balance of the year on gas. Crude, there's a wide spread between this year and next year. Again, as you said, fundamentally, we are bullish, but that's pretty much all that was on my mind. And I think that's going to do it for today. So thanks so much. Come see us. And Bill, did you have something else?
Just one final thing is that a lot of times you'll find these people sell the fear, buy the fact. So
Yep. And be ready. I think a tumble's coming in gas, but watch for $9. If it pierces that, it is going to go up, but I think it's going to come back down. So we're not financial advisors. Please read the disclaimer. Thanks so much. Have a great day.
See you.